very good afternoon. Let's take a look at the markets. Asian markets slowed down following a euphoric run this week after the US and China came to a trade truce, albeit a temporary one, with some believing the good run this week may have been cause for some profit-taking ahead of the weekend. The Nikkei share average ended flat. The Hang Seng Index declined by 0.5%, while the Shanghai Composite Index ended the session down 0.4%. US markets were mixed in Thursday's session. This as poor economic data out of the United States suggested to investors that a rate cut could be a real possibility. The US Producer Price Index for April declined by 0.5%, while core retail sales contracted, indicative of a more cautious consumer. Industrials, utilities and pharmaceuticals were gainers on the day, with the likes of General Electric jumping 3% following Qatar Airways placing an order for more than 400 GE engines to power its Boeing fleet. The Dow Jones Industrial Average gained 0.65%. The S&P 500 rose by 0.41%, while the Nasdaq Composite Index closed down 0.2%. Looking at local indicators, we see that the all-share index is currently up around 0.1%, trading at 92,413 index points. The local currency has firmed up quite nicely against major currencies. It's trading at 18.04 against the US dollar, 2017 vis-a-vis the euro, and 23.96 against the British pound. Gold is trading at $3,202 an ounce. Platinum is trading at $986 an ounce, while Brent crude oil is hovering around $64.60 a barrel. All right, let's get into it now with Mabionane Piri. He's from EBC. Thank you very much for joining us, Mr. Piri. So at the close of the week, what's your reading of how markets have fared, the main drivers, and what do you see as the main catalyst driving markets next week?
Yes, so this week the South African markets ended on a strong note. The main stock index is up nearly 10% for the year, and the rand strengthened by over 1% to the dollar. The key drivers, I believe, positive remarks from Deputy Finance Minister David Masondo sparked investor confidence, especially his comments on possible changes to the inflation targeting framework. We also saw bond yields come down, indicating growing investor optimism about fiscal stability and better governance under the GNU. So looking ahead to next week, all eyes are on the release of the national budget. That's likely to be the biggest catalyst, along with any official announcement on the new inflation target range.
So you talk about, you've touched on a number of things that I want us to talk to anyway. So let's home in on next week's Budget 3.0. What are you hoping is going to come out of it? It sounds from the likes of what David Masondo was saying, the Deputy Finance Minister, he thinks it's a done deal. He's talking about consultations having been done very well relative to before, which is why we're now at this Budget 3.0 stage. So what are you expecting to come out of it? And do you think they're going to get the balance right between, injecting economic growth in the economy while at the same time pleasing the markets and the ratings agencies?
Absolutely. So Mr. Masondo's remarks were significant. He pointed out that this version of the budget had more buy-in from the GNU parties compared to earlier drafts. That sent a very strong signal to the markets. In other words, policy direction is becoming more predictable. As for the inflation target, yes, the possibility of lowering the target is being seen as a move toward a more disciplined and transparent policy framework. This helped boost the rand and build investor confidence. So in brief, both the minister's political messaging and the economic policy hints worked in favor of the markets.
So there's talk about the possibility of a strike at Transnet. I mean, this will be yet another setback for the economy, and presumably that, we'll see the rand lose ground yet again if it's prolonged, if it does happen.
Yes, this is actually a very serious risk. Transnet is already struggling with port and rail inefficiencies, and a strike would just worsen the situation. Let's not forget we've had export disruptions from Transnet before, which cost the country billions of rands. A prolonged strike would damage key export industries like mining and agriculture. That would also, number one, reduce foreign exchange inflows. Secondly, it would put pressure on the rand and shake investor confidence again. So yes, if the strike happens and it's protracted, it could definitely weigh in on the economy and subsequently on the currency.
All right, Mabianine, thank you very much for your time and your insights there. Have a fantastic weekend. That was Mabianine Piri. He's from EBC.